and welcome to the Orange Genie webinar on off-payroll working in the public sector. I'm Graham Fisher, Chief Executive of Orange Genie Group. I'm also a board member of the Freelance and Contractor Services Association. Presentation should last about 35 to 40 minutes, allowing time for Q&A session at the end. I've placed you all on mute while I go through the presentation, so you don't have to worry about phone calls ringing or you talking in the background. No one else will be able to hear it. I'll unmute you for the Q&A session at the end. Hopefully you will be able to see and use a chat box. It'll be open throughout the session, so you can type questions in at any time. If for any reason we don't get around to answering your question, we have a record of those questions, and we will come back to you by email and let everyone know what those answers are. We're also going to be sending a copy of the slide deck to you all, so you don't need to try and make notes of the slides as we go up. Okay, now before I get into any detail and you start to wonder if this is relevant to you, here's a really short version. Until now, public sector contractors operating through their own limited company have been responsible for determining whether their contract falls inside or outside IR35. They tell their accountant, who then calculates their taxes based on that decision. And if HMRC later decides the contractor was wrong and they have underpaid their taxes, the contractor will be liable not only for the back taxes, but also for HMRC fines and interest. After the autumn statement, and likely to come into effect on the 6th of April 2017, everything changes. The responsibility for that decision, and ultimately for any back taxes or fines payable as a result of it being wrong, it will fall. Apologise, I've got some noise coming in. Let me just say that one again. After the autumn statement, everything will change. The responsibility for that decision, and ultimately for any back taxes or fines payable as a result of it being wrong, will then fall on the organisation that pays the contractor, which in many cases means you, the recruitment agency. So that's why this is important. Okay. Although we won't see the draft legislation until the 23rd of November, the date of the autumn statement, our reason for jumping the gun is that I've attended a number of meetings, public and private, with HMRC and Treasury to discuss the proposals, and I've got a pretty good feel for what's going on. We thought it would help you with your planning process if I shared the information I've gleaned with you now. We will run a follow-up seminar a few days after the 23rd in order to bring you up to date with the draft legislation once it's published, and try and give you our view on its impact on you, on us, and on the contractor. Everyone who has attended this seminar, this webinar, will receive an invitation. I'm going to do my best to cover off all the points on this agenda. Before I start the presentation, I just want to address what I've heard as strong rumours that the introduction of these proposals will be delayed until 2018. Having heard those rumours, I've spoken to HMRC towards the end of September, and they have confirmed to me personally and subsequently reconfirmed at the IR35 Forum that ministers had given their approval to proceed. So the legislation will be included in the autumn statement. So right now, we should assume they're sticking to their timetable, despite huge amounts of lobbying still going on and huge opposition to the proposals. Most of you will be aware of the Intermediaries Legislation, but just in case one or two of you aren't familiar with it, I've added this slide for a really quick overview. The Intermediaries Legislation, also known as IR35, was introduced in April 2001 and designed to identify and stop disguised employees and their duplicitous employers from using a limited company structure, also known as a personal service company, essentially to avoid paying employers' national insurance contributions. Currently, as you probably all know, that's 13.8% of gross pay. There were other opportunities for tax savings, but employers' national insurance was the most significant, as it isn't paid on dividends. So by taking earnings out of the company as dividend rather than salary, the contractor could avoid paying the national insurance contributions. In the old days, the savings were often shared between the employer and the disguised employee. The personal service company was defined as an intermediary, hence the name the Intermediaries Legislation, because it stood between the employer and the disguised employee. Legislation wasn't intended to catch those genuinely in business in their own right. Currently, responsibility for determining IR35 status lies with the PSC and the contractor, and it is also responsible for ensuring correct taxes are paid. The assessment of whether IR35 applies is made on each individual assignment. When an assignment is deemed to be inside IR35 or caught by IR35, no dividends can be paid, and all earnings must be subject to full PAYE and national insurance deductions. In other words, the personal service company cannot avoid paying employers' national insurance. This calculation is known as the deemed salary calculation. However, if you look at the last paragraph, you can see that interpreting the legislation is not a simple matter. Some years ago, it was thought that the contract alone provided the key evidence that was needed, and we used to see promoters advertising IR35 friendly contracts. But 16 years of case law rulings swept this belief away long ago. Over the years, we have seen that no one piece of evidence is sufficient in reaching a decision. PSC, Personal Service Company, has to look at each assignment holistically and consider a number of factors in order to reach a conclusion. I've listed 9. There's no clear-cut yes or no answer, and it is often about interpretation and placing differing weights on the information depending on the individual circumstance. The legislation is not liked because it's complex, takes time, and introduces uncertainty. IR35 legislation has a history of failure from its original drafting in 2000 through to the current proposed changes, which have been universally condemned. The original legislation, as drafted in 2000, placed responsibility for the assessment of each assignment with the hirer, but fierce lobbying of the then business-friendly Labour government by the CBI successfully brought about a last-minute change, and responsibility for the assessment and payment of tax moved from the hirer to the PSC. This made enforcement virtually impossible. HMRC investigations had to be opened against individual personal service companies, and information on contracts, actual working practices and so on had to be obtained from the whole supply chain, often from companies who had no direct relationship with either the contractor or the hirer. As a result, each investigation can take years to complete, really risen above 200 to 300 a year, and few prosecutions have been successful in court. Given the hundreds of thousands of assignments entered into each year, it's little wonder that many PSCs are willing to take the risk that they won't be caught and calculate their tax as if it's outside IR35, thus avoiding substantial tax payments. We continue to see a number of rogue promoters putting schemes together that take advantage of this lack of enforcement, which doesn't help our sector at all. From the last bullet point, you can see HMRC's estimate of the problem in the public sector. I have to say that we question and we've challenged these assumptions, and they haven't been substantiated, but those sorts of numbers attract the eye of ministers and Treasury, whether we agree with them or not. I have to say, in the last few weeks, we have seen evidence of a rise in enforcement activity. A recent court case confirmed that HMRC had opened over 100 investigations against media companies where the contractors had worked or were working on assignments with the BBC. The last couple of weeks, we've seen HMRC using the onshore intermediaries reporting data to open investigations against a large number of PSCs operating through one specific hirer. Okay, if we look at the timetable relating to the proposed changes, you can see that HMRC launched a quick fix, a public procurement notice, PPN 0815, in which they placed responsibility on the public sector organisations to either place contractors on payroll, particularly senior appointments, or where the day rate was over £220 and the contract more than 6 months, they had to seek assurances from the PSC or its advisors that the correct tax was going to be accounted for. Our own accounting practice, Genie Accountancy, regularly issues certificates of tax compliance and respond to questionnaires from the public sector organisations on behalf of our contractors. HMRC have gone through a consultation exercise, and many of you will be aware that the current proposals have been universally condemned, and I'll give you a range of reasons. They are ineffective, confusing, complex, adding administrative burden, placing responsibility on those with least information, penalising compliant agencies, and so on. I won't go on, but I just want to point out that even the Office of Tax Simplification, an advisory department within HM Treasury, have condemned the proposals for adding unnecessary complexity and work to an already difficult area. All this seems to have fallen on deaf ears. That's our assumption from the meetings I've attended. We might be pleasantly surprised when the draft legislation is published, but I doubt it. As I said earlier, we've been told that the proposals have ministerial approval, and our firm expectation is the legislation will be live on the 6th of April 2017, with detailed guidance notes being released in January or February, or if they follow the track record on TNS, they weren't released until April. So let's dig a little bit deeper into the proposals. Public sector is defined as organisations covered by the Freedom of Information Act 2000. It has been amended several times after that. We're told that very few organisations have commented on this definition, so it's likely to be retained. The Freedom of Information Act includes people like government departments, legislative bodies, armed forces, local government, NHS, schools and further and higher education, police, British Museum, BBC, Channel 4, security forces and various publicly owned companies, including, for example, Transport for London. I'm aware that many respondents have asked that HMRC create a web page and keep it up to date with a definitive list of qualifying organisations to help the intermediary decide whether they're dealing with a public sector organisation or not. The public sector definition does not include private sector companies providing outsourced services to the public sector. Examples might be Serco or Capita, people like that. Essentially, when a PSC is involved in the public sector supply chain, these rules will apply and the assignment will be in scope. That doesn't mean the assignment is caught by IR35, but it does mean an IR35 assessment will need to be carried out. As the liability will lie with the intermediary making payment to the contractor's PSC, the assessment sits with them and not with the contractor. Clearly, it's in everybody's interest that an assignment that is genuinely outside IR35 be assessed as outside IR35, as it could make a difference of between 20 and 30% on take-home pay or agency margin. We are aware that some public sector organisations have been instructed to complete formal temporary staff planning exercises by December and to timetable when long-term contractors will be replaced with employed staff. Seems to imply a move in any event to reduce the number of contractors and the size of the market. Those public sector organisations have also been informed that the burden of ensuring their supply chain is compliant with the new IR35 legislation will rest with them. They are expected to carry out regular checks on their supply chain. In other words, undertaking the compliance work of HMRC and freeing HMRC to focus on the private sector. It's no wonder really the public sector organisations are opposed to these proposals. Changes as initially presented were intended to move the responsibility and liability for assessing IR35 status and paying the correct taxes to the hirer, as was originally intended in the 2000 draft legislation. Yet, having told us that the public sector must put its own house in order, it is quite clear that these proposals allow the public sector organisation, the hirer, to quite simply pass responsibility and liability to the agency or the third-party intermediary paying the workers PSC. We have no doubt that these changes will be imposed on the private sector within a couple of years, despite denials. If they can save 440 million in the public sector, how much do you think they can save in the private sector? Central to turning this complex piece of legislation and 16 years of case law into a simple, comprehensive, easy-to-use test, giving certainty and safe harbour, lies with the release and success of the off-payroll digital tool. And herein lies the reason for everybody's scepticism. Other than HMRC, nobody believes this tool will work, and we have seen precious little evidence to feel optimistic. We are told that its use will not be compulsory. We suspect HMRC know it won't be ready. And our beta demo, scheduled for 27th of October, was postponed to the 24th of November because it was not in a fit state to demonstrate. So FCSA were asked to work with HMRC to develop the tool. We've had one meeting since August, and from the original idea of 6 relatively simple questions, we saw the first iteration, and it contained 44 questions. Some were irrelevant to assessing IR35, and others were open to interpretation. HMRC have based these proposals on the certainty that the off-payroll digital tool will produce clear results. It assumes assignment information is made available by the contractor and by the public sector organisation. It assumes questions will be answered with a simple yes or no, and no allowance has been made in the iteration we've seen for maybe or not sure. So we have a series of concerns. Firstly, the lack of compulsion on the public sector organisation to supply information. And if we look at the history of agency workers, regs and TNS, we see most public sector organisations reluctant to supply information. There's no data storage for fear of breaching data security laws. That means you will have to request the relevant information from the public sector organisation and the contractor. You will have to enter the data question by question into the off-payroll digital tool for each assignment and hope, of course, that you've answered them correctly in order to get an IR35 assessment. The assessment may be open to challenge by the contractor or by the public sector organisation if the contractor demands a higher rate. Although we're all pleased to hear that the completion of the test would offer safe harbour, we've seen more and more qualifications on what this means and how long it will be valid. So having carried out the initial simple assessment, it will have to be repeated at regular intervals to ensure no change in status has occurred, and it will need to be repeated if anything changes in the manner in which the assignment is undertaken. In cases when IR35 does not apply, that is, assignments where the contract is assessed outside IR35, the contractor can be paid gross through your normal supplier pay run. However, the outside IR35 cases will be the ones where you will retain a long-term contingent liability, up to 6 years or longer in the case of fraud, if the status decision is wrong, and of course you'll be liable for unpaid taxes, interest and HMRC fines. Inside IR35 decisions need to run through your payroll. There are a number of issues that need to be clarified, and you will need to make some changes to your payroll software. Issues on which we've sought clarification are whether the normal 5% deduction is going to be removed. There was some suggestion it would be, but HMRC have yet to explain if it's going to happen or not. We need to understand that in allowing deductions for pensions and so on, how do you ensure that they're actually paid over? OTS has strongly recommended that the VAT should not be allowed to be charged when the contractor is judged to be a disguised employee. HMRC have told us that the decision is currently with the VAT team, so we'll have to wait and see the outcome. This VAT ruling may well put a stop to the MSc hybrid schemes, which we've seen used by some teachers, nurses, social workers, couriers and other low-paid people, and which HMRC regard as abusive. We've pointed out that no allowance has been made for appeals. We anticipate a significant number, and you may well feel you need to support your contractors through this process. HMRC was surprised that appeals might be made and have made no allowance for them. So I've actually sat through 6 meetings with HMRC and HM Treasury. I've seen the proposals condemned. I've seen HMRC particularly make copious notes, and yet in every subsequent meeting I've attended, I've seen the same introduction and the same presentation. I've seen no changes made to take into account the comments that have been made, although some have been acknowledged. It's been a hugely frustrating experience, and many feel their mind was already made up, and they're purely going through the motions with their eye on the 440 million pot of gold. These points on the screen form, in my opinion, their rose-tinted view of the world. I've attended HMRC meetings with REC, APSCO, large agencies, small agencies, accountancy bodies and others, and these points reflect the dismissive answers we've had. HMRC's view is that the intermediary will be capable of carrying out the assessments based on the information willingly supplied by both the public sector organisation and the contractor. And you can see from the last point, their view is that you have the knowledge, time, data and expertise to carry out IR35 assessments. Okay, so this is the if it goes wrong scenario, and it is deemed that the correct taxes have not been paid. The proposals include a transfer of debt liability. So, assuming everything works, the fundamental concern you should have from the 6th of April is if you are the intermediary paying the contractor's PSC, you will be liable for any underpayment of tax, interest and fines. This should only happen when you have determined that an assignment is outside IR35 and you have paid the contractor gross, in other words, through your supplier pay run. The only get out of jail card you have is if the intermediary paying the contractor's PSC, if the information supplied by the public sector organisation, the hirer or the contractor, has been provided to you and it is known to be fraudulent information, then the liability sits with the person who has provided the fraudulent information. HMRC believe the information will be made available by the public sector hirer and down the supply chain, and that information will be forthcoming from the contractor, so they are currently not convinced any compulsion is necessary. So what's likely to happen at this stage, this is what we think is likely to happen, but clearly is going to be open to change. Pressure is being placed on public sector organisations to employ contractors directly through their payroll on time-based contracts, taxing them like employees but without offering employment rights, pension contributions and other benefits. It's clearly a sensitive issue that's been brushed aside to date, I think because they don't have an answer and they haven't thought this through. And of course the recent Uber ruling might give them cause to think again. Clearly, if you're unhappy with your rights, then go to court. Digital tool may not work and may not give correct assessments. And of course, it can easily be used by unscrupulous promoters who can manipulate the results in order to attract contractors by offering higher tax savings, possibly backed up with worthless guarantees and printed digital tool assessments. It's quite normal for IR35 status not to be determined until after the assignment has started, and no allowance has been made for this. All in all, we think most intermediaries may well adopt a low-risk approach and deem all assignments to be inside IR35. Orange Genie is already seeing contractors move into umbrella employment for public sector contracts. We've seen some public sector organisations refusing to engage with PSCs for fear of penalties falling on them. We've seen contractors refusing to move onto public sector organisation payrolls because they are contractors and at the end of the day they want to stay contractors. And we've also seen contractors move away from public sector organisations in case assignments that they're on now are shown to be inside IR35, where they are genuinely thought to be outside the IR35, and they're concerned that retrospective legal action will be taken. We're also seeing lots of inaccurate advice and assumption being made, quite often by the public sector organisations. So, in summary, everything I've touched on is we see no delay or postponement. The proposed rules will clearly cause significant impact on the market. Most public sector organisations and agencies will be risk averse. Information will be difficult to obtain. Major impact on it's going to be on high skill, high rate PSCs properly operating outside of IR35. And of course, there's going to be a major impact on those who are inside IR35 and reporting outside IR35. And we're beginning to see the pendulum swing back to compliant umbrella solutions where there will be no liability falling back on the agency. So what are you doing about it? You should assume this legislation will be operative in April 2017. And you should start planning for that change now. Clearly, I think you don't have to jump right now if you haven't started your research. You can probably wait now until November the 23rd, when this will be announced. You need to appoint a transition team, and they need to become familiar with the legislation. Their first task should be to identify the hirers or your clients who fall inside the Freedom of Information Act. And engage with them to discuss how they want to deal with information flows and risk management. You should also review your preferred supplier list for PSC advisors. Remove offshore providers, remove any promoting MSc-style schemes, remove anyone promoting the use of EBTs and so on. These all open risk to you of further debt transfer. In the light of a HMRC announcing more rigorous enforcement, my personal view is to ensure your PSCs only deal with FCSA accredited members, I would say that, wouldn't I, who are independently assessed for compliance. FCSA members, where they find that a contractor is operating outside IR35 and it's clear they should be operating inside, have a duty to make it clear to them that they shouldn't operate that way, and if they won't change the method of operation, FCSA advisors will resign from the account. You need to identify the contractors who will be affected and discuss with them what they want to do. And finally, if you are affected, consider whether you want to manage the risk yourself, i.e. building in-house capability, or whether you wish to outsource the administrative risk and risk management to somebody else. What are we doing? Well, we're starting to prepare a suite of presentations to support you, the agency, with raising awareness and knowledge of your staff. We're putting together supportive presentations for public sector organisations and IR35 familiarisation training. There are a number of options that we have available and that you have available to you. Option one is what I call business as usual. Use Orange Genie umbrella, Orange Genie Education. It will not expose you to any liabilities, contingent or otherwise. Orange Genie Accountancy, PSC clients are all provided with IR35 assessments. Option two is we're developing support services that we've traditionally used in-house to be suitable to support you. We have the in-house expertise to carry out IR35 assessments, and should you decide to continue paying PSCs and effectively be on the hook as the intermediary, we can provide an assessment service for you or training for your existing staff. You'll still be on the hook in terms of transfer of debt provision. Option three clearly is outsourcing. So you're still on the hook, but we'll be launching Orange Genie outsourcing services, and you can outsource all payments and assessments to us. We'll provide the IR35 assessment service and agency PAYE. And finally, option four is that, assuming these regulations come into being, we will be launching a payment intermediary company. The company will become part of the supply chain, and you can channel all public sector PSC contracts through Orange Genie Public Services. We will have all of the risk, and we will undertake all of the risk management. All public sector contractors can come through us, whether they're working with Orange Genie or other accountants. We will pay them all. So it's for you, it'll be one invoice and one payment. All IR35 assessments, with or without the digital tool, will be carried out by us. We'll make payments direct to contractors, whether that be through a typical what we call gross or supplier payment run, or through PAYE. We'll also complete annual returns for them, and we'll give them support for appeals.